The year 2021 has exciting changes in store for the Ethereum project, including the deployment of Ethereum 2.0, increasing institutional interest, and a boom of advances in the DeFi industry. How are all those events going to impact the price of Ethereum? What are the risks, prospects that investors should be aware of in 2021? Let's find out. My name is Firas from Decentralized Chain. Welcome to another video. If this is your first time here and you want to learn about crypto, whether it's news, insights, or analysis to help you get that edge, start now by subscribing and clicking the bell so you don't miss anything. Ethereum is one of the biggest cryptocurrency markets in the world, second only to Bitcoin, both in terms of market cap and prominence amongst industry players. Launched in 2015, the project has been a core cornerstone for many fast-moving, disruptive innovations such as decentralized apps, smart contracts, NFTs, just to name a few. Now, at the time of this video, more than 113 million tokens are in circulation with a combined market cap of over $113 billion. And about 1.1 million transactions are conducted on the Ethereum blockchain daily. The pioneer cryptocurrency maintains its strength as a critical guiding factor in all big digital currencies. I personally believe Ethereum's ecosystem has the potential to decouple from the king of crypto. So what does 2021 hold for us? Before we do, let's recap Ethereum in 2020. More than 3,000 dApps with nearly 100,000 active users every day are currently being installed on the Ethereum blockchain, and their numbers are growing. The number of Ethereum transactions has more than doubled since the beginning of 2020, while the number of new accounts generated on a daily basis has risen by more than 500%. In the meantime, market cap at Ethereum grew to 77 billion, which marked more than a 450% growth from 14 billion earlier in the year in January. Now, also, Ethereum reached the lowest level in 2020 at $90 in the middle of the global crypto sell-off triggered by the advent of the COVID-19 pandemic, and peaked at $750 in December after the successful launch of the beacon chain Genesis block. Now, the coin returned to 2018 stage and regained half of the losses suffered during the crypto winter. In 2020, we have seen three big trends which I expect to dominate the Ethereum agenda in 2021. Firstly, DeFi. The new industry has made finance facilities easier and quicker and more available by replacing intermediaries and empowering individuals to borrow, lend, conduct other transactions directly. While the industry remains in the experimental stages, its promise is immense, and in the future it will continue to hold as it offers real use cases for crypto. Now, because Ethereum is the blockchain for the vast majority of DeFi ventures, this has continued to push Ethereum rates higher in the second half of 2020. More investment flows into the ecosystem. Here comes the second critical trend, institutional interest in ETH. Now, according to Michael Sonnenschein, managing director at Grayscale Investments, large investors have expressed confidence in Ethereum. Many new customers of the company have chosen Ethereum-based trust to gain exposure to the cryptocurrency market. The company reports that investment inflows in Grayscale Ethereum Trust increased by 184 million in the third quarter of 2020 compared to the same period a year ago, with over 17% coming from new investors. And as of December, there are over 30 million shares in circulation from 5.2 million at the end of 2019. So moreover, Grayscale's Ethereum product is trading at a 140% premium over the spot price. So the successful introduction of Ethereum 2.0 is the last but not least the bullish trigger in 2020. The launch of the second version, also known as Serenity, is the most critical event for Ethereum in 2020. The major upgrade is ultimately allowing the protocol to turn into a financial environment which supports the increasing network load with adequate protection and scalability. So what are the Ethereum trends to watch out for in 2021? Well, firstly, and it's not really surprising, it's DeFi. Whilst the craze may have calmed down from what we witnessed in the second quarter of 2020, come 2021, the ecosystem will begin to expand exponentially. The protocols will evolve and become less vulnerable to hype and security abuses. Also in 2021, DeFi may become part of the current financial system for the conventional financial sector. The industry will benefit from this growth as ERC20 tokens are synonymous with DeFi. A cash inflow into these protocols will result in a rise in Ethereum rates. Number 2, NFT. Another cool element after DeFi is NFT, or non-fungible tokens. The definition covers items such as digital art, gaming devices, and other digital objects. The tokens are all based on the blockchain from Ethereum, each of which is unique. CryptoKitties, if you can remember that far back, began the history of NFT industry in 2017. But only in 2020 did the concept catch on. At the end of October 2020, over 14% of the use of the Ethereum network was in the market, while according to nonfungible.com, the total regular amount of trade approached $100 million. Some NFTs sell for thousands of dollars, and every day major players are entering the market. In view of the advantages associated with non-fungible blockchain-based tokens, the art galleries and the industry already is paying attention. The market is poised for a stellar 2021. Number 3, Ethereum as an investment opportunity. The Ethereum blockchain is more than a payment unit, unlike Bitcoin. Institutional players continue to discover Ethereum and its investment characteristics in 2021. A gradual rise in value and comparatively low volatility continues to draw hedge funds, asset managers, and rich people who are looking to diversify their investment portfolios beyond just Bitcoin. Now that BTC has reached an all-time peak, many industry participants can also see it to be too pricey and dangerous. They begin looking at the next big thing, and Ethereum blends in with the definition. As the coin is still 45% below its all-time peak but catching up quickly, development is probable as this provides a strong atmosphere which it is centered on. So since early 2020, Ethereum addresses have risen from 17 million close to 29 million, carrying coins over the span of a year, from just over 2 years to just under 3 years overall, as an investment cycle has increased. So this data indicates that the number of Ethereum whales is increasing. In 2021, the trend will be increased. Number 4, Ethereum mining will end. Mining in Ethereum blockchain in 2021 will be disabled as the team continues the development of Ethereum 2.0 Serenity update. The transformation aims to eliminate the drawbacks of the proof of work algorithm and improve the speed and scalability of the network. It is very promising outlook for Ethereum 2.0, but it's all a gamble at this point when no one knows for sure how things will pan out. Number 5, finally, F decoupling. The surge in institutional investment into Bitcoin has created many financial related instruments with lots of derivatives that affect the spot price. This will only continue and begin to separate Ethereum and other altcoins, helping them to gradually decouple from the king of crypto. There has also been a steady decline according to coin metrics in terms of the BTC to F correlation. Whilst it is still strong, it has declined from 0.93 to 0.77 over the last 6 months. So where does this leave us? On the upside, we are testing the current resistance. Next stop, well over $1,000, break our psychological barrier and remain above the $1,000 mark. And given the positivity, the market sentiment, and clearly being in a bull cycle, once we break the all-time highs in the 1,400 region, $2,000 easily seems like a possibility, especially given what we can expect from the trends. Let me know what you think in the comments below. Do you think Ethereum is ready to break its all-time high? Or are we going to take a major dump and revisit the 300s before pushing to the all-time high? See you on the next one.